Well, what's going on, everybody? Welcome back to Money on Life TV. I am Mike the CPA, and on this channel, we cover finances, investing, and taxes. Hope you're all having a great day. I got my coffee, and I'm ready to talk about some more dividend investing. First off, I just want to say thank you for the tremendous positive support you've poured out on that last dividend investing video. It was unbelievable. I don't think I've ever had a video hit 10,000 views so quickly. So just thank you so much. If you want to continue to see more content like this and around this topic area, just continue to crush that like button. It's going to let me know that you want to see more of it. Also, it's really going to help out the channel. So thank you for continuing to just crush that like button. And just please leave your questions, your comments down below. I still have a lot of people to get back to. Now, speaking of comments, in the next part of this series, it's all going to be about answering your questions, your comments, concerns, whatever it may be about dividend investing. So definitely, whatever your thoughts are, whatever questions you have, leave them below, and that's what I'm going to base this next video on for this series. All right, so this video is coming from a subscriber request in a sense, because they asked me, they said, Mike, how did you get started, and what did it look like? What kind of money did you contribute monthly to these accounts to get this ball rolling? So that's what we're going to discuss today. And I'm going to show you how you can start. I'm going to recommend some videos you watch and also just kind of give you some tips along the way, with hopefully without making it too detailed. I still want to keep this one pretty casual, but we're going to get more and more detailed along the way.
Make sure you tell them about all your mistakes. I know you made some big mistakes.
No, thanks a lot, Chipper. But don't worry, we're going to be covering those mistakes. So yes, along the way, as we're discussing this, I'm going to be sharing with you some of the mistakes I made so that you can avoid it for yourself. So let's just go ahead and get started. And let's talk about portfolios, or what platform I use to build a dividend investing portfolio. For my wife and I, we used Ameritrade, okay? That's what we're using. We originally started with Scottrade, but in the past year or so, that Ameritrade bought them out. And so now Scottrade has become Ameritrade, and that's why we use them. I like them. There is a small transaction cost per transaction of $6.95. But beyond that, it's not too bad. I can do dividend reinvestment programs. I can open up a Roth IRA through them. I can, invest in options if I want. There's all sorts of things you can do on the platform. Now, if I were starting over, you might look at Robinhood. If I were starting over, I'd look more at Robinhood as an investing platform for a taxable brokerage account, because there's no transaction cost when you buy or sell investments. So that part I really like. But there also are some limitations as well. So you want to look into what those limitations are. If you want to know how to start investing in stocks that pay dividends and how to set up an account, check out this video right here. Let me get this. Am I doing this right? Here we go. Yeah, so right above my head here, click there, and it'll take you to a video that I produced. It'll show you step by step how to open an account, how to start investing in stocks that pay dividends. And it will also discuss a few of the other investing platforms out there. So check that out. Now, let's start with my mistakes. So if I were you, if I were to do things over and do it differently, the first thing I would do is I would start with a Roth IRA. The mistake I made is I started with a taxable brokerage account, okay? So everything I was investing in could be taxed. But as much as you can, I would encourage you to do your investing tax-free. So that's why I would recommend for you, if you're starting from ground zero, and this is what this video is about. It's starting from ground zero, or building a dividend portfolio from $0 invested, accumulating assets that will help you grow a dividend income from $0 to $100 a month, $0 to $200, $300, $400, etc. Okay, so that's my first tip, is start with the Roth IRA, because Roth IRAs are limited to how much you can put into them every year. And so I have videos that cover the rules on Roth IRAs, so check that video out. I'll link it in the description section below. And I also have a video that covers how much money you could potentially earn by investing in a Roth IRA over the course of your lifetime. It's quite substantial, and the best part about a Roth IRA is everything that comes out is completely 100% tax-free and does not affect your taxable income. So that's number one, is I would find an investing platform that you feel comfortable using, and then I would open up a Roth IRA. So what you're going to see is that from this example, and these aren't our exact numbers, but roughly speaking, this is pretty much what we do. It's pretty close, okay? And don't focus too much on how much money we put in every month. Some people are going to be able to put in more than what we do. Some people are going to be able to do less. But don't get hung up on that, okay? Start with whatever you can do. If you can do $100 a month, do 100. If you can do 500 a month, do that. But make sure you start off as much as possible doing it through a Roth IRA first. If you have more money than that you can invest, then open up a taxable brokerage account, and then anything in excess of what you can contribute to your Roth, invest there. And that will help get your dividend income snowball growing, okay? That's what I would recommend. Okay, so let's look real quickly at how my wife and I basically started. Let me zoom in a little bit so you can see this. So when we first started investing in year one, now like I said, this is just an example. These aren't our exact numbers, and I'll tell you more here in just a little bit. But when we first started in year one, we didn't always invest a consistent amount. Some months we put in like $800, some months $1,000, $1,250. Some months $0 because we had home repairs and other things we had to deal with, so that we were not able to really invest, okay? So some months we didn't put anything in. But most months we consistently invested, okay? About $1,000 a month, right? So by the end of the first year, we had about 10 grand, give or take. If you want to know what we do roughly today, well, now this example, we're starting with our taxable brokerage account in this example because that's what we did. That's what we did. And then, like I said, I should have started with a Roth, but this is where we started. In this account, even today, we contributed about $1,000 to $1,500 a month consistently to this account. Every single month, we budget. The process is this, okay? We make money, we budget, save, invest. Make money, budget, save money, invest. That's the process. So that's about how much we contribute to these accounts every year, or every month. Okay, about $1,000, maybe up to $1,500 a month. That's what we've been doing, and that's how we've been able to grow our investments over time. Looking back at year one, when I first started, the mistake I made as an investor is I invested too much money into too few stocks all at once. That was the mistake I made. So our first two biggest investments ended up being about $5,000 in Chevron and about $5,000 in Blackstone. And they pay a good yield. They're strong companies, but this was back in like 2012, 2013 or so, okay? Or 2014, somewhere back in that time span. So what happened is those companies greatly decreased in value, and my account for a while had like an unrealized loss of about $4,000. It was not fun. And I could have avoided that had I been more careful about how much money I invested into those companies early on. So what I'm saying is I don't recommend investing all your money all at once into one or two stocks. Scale into them and buy shares slowly over time. So today, instead of investing $5,000 or $10,000 at a time, we invest maybe like $1,000 to $2,000 at a time, or sometimes even only $600 or $700. So we're more careful about how much we invest per transaction. And that's a concept known as position sizing, which we're going to discuss more about that in a future video. So Chevron and Blackstone is how we got started. And just to give you a quick idea of how this works, because a lot of people are asking, how does this work? So, and these are rough numbers, okay? So in this example, we're in the first 3 months of, let's say January, February, March. Let's say you invested $800 as of January 1st, okay? And you invested on February 1st, you invested $1,000. On March 1st, you invested $1,250. So in total, for those 3 months, you've invested $3,050, right? So now what we need to do is, what is our average yield? What is our weighted average yield in our account? So in this example, our average yield, our dividend yield is 3.5%, okay? 3.5%. So what we're going to do is we're going to take these first 3 months, we're going to multiply that by the annual yield of 3.5%. That gets us $106.75. Now, if you listen carefully, I said the 3.5% was the annual yield. Now, most companies pay dividends on a quarterly basis. So that's usually when you'll receive your dividend income. So we have to divide this number now by 4 for 4 quarters. So that's how we get $26.68. And as you'll notice here, so in this example, if we had invested about $3,050, we might expect our first total dividends from whatever stocks we own, whether we invested in one, whether we invested in 3 different ones, we might expect $26.68 roughly in dividend income, okay? This is not an exact science, but this is generally how it works. So let me show you. Let's continue just so you understand what's going on here. Let's look at the next dividend payout date, okay? So from January to June, how much money did we put in? Well, let me highlight this. So from January to June, we put in $5,150. So $5,150. What's our average yield? We know it's 3.5% in this example. So we're going to multiply that number by 3.5%. Now we're at $180, okay? But now we have to divide that by 4, right? Because it's per quarter. So we divide that by 4. So in the second quarter of year 1, we can roughly expect our dividend income in total from however many investments we own. Collectively, it's going to be a total of about $45 in this example. And as you keep investing, as you keep adding more money to your account, then that payment every quarter, is going to continue to grow. So by third quarter, it's going to be $66. By December 31st, you can expect your payment to be closer to $100. So in this example, by the end of year 1, you have made $232 in dividend income with a 3.5% yield and a total amount invested of $10,800. But now some people ask me, Mike, do you reinvest your dividends? Absolutely. So I reinvest this. So if we have been reinvesting these dividends, we've now invested $11,032. So in year 2, we continue to put money into our brokerage account. About $12.50 per month, $12.50, and that's what I plan on doing this month. To be honest, $12.50, and then next month $12.50. Keep adding to it consistently. And then from our last video, if you remember, in year 2, when we started getting serious about investing, that's when we opened the Roth IRA for me. Okay, so that's when I started maxing out a Roth IRA. So we were doing $12.50 per month up here, and about $500 per month in the Roth IRA. Now, as you can see, I have a dividend line here on the taxable brokerage account. I didn't have time to add dividend payout lines here because I got a lot going on this weekend, but you would also start to receive dividend income from these accounts, just like we showed in the first video to this series. Remember that page where I showed you how we had 3 different accounts, the 2 Roth IRAs and the brokerage account, all where they were receiving dividends throughout the year? That's what would be happening. So in year 2, I opened a Roth, we maxed it out, okay? And so following the same pattern, our quarterly dividend income up here continues to increase because we have more and more money working for us, right? We have more and more money invested, more money receiving dividends. So at the end of year 2, we have, in this example, about $26,000 invested, and our total annual dividend income is around $731. The other thing now that's really important to point out is that over time, our average yield should increase. Now, why is that? So in year 1, if you remember, our yield was only 3.5%. But in year 2, our average yield became 3.675, okay? And all this is just as an example, but if you're investing in good quality companies, what's going to happen is they're going to increase their dividend payout over time. And I think the average dividend increase for companies is anywhere from like 3 to 7% per year. So in order to get that increase for this example, I took 3.5%, 3.5 times 1.05 is 3.675. So not only will you have more money working for you the longer and sooner you invest, but your average yield, if you're invested in good quality companies and good ETFs, should continue to go up. So your income for your dividends continues to go up as well. Does that make sense? And that's why I got a lot of questions, which I'm going to address this in future videos. and we're going to look at how to like estimate it. But I got a lot of questions like, Mike, how much money do I need to invest to make $500 per month in dividends? Mike, how much money do I need to invest to make $50,000 per year in dividends? Well, the answer is it depends. The sooner you start this, the sooner you're going to get compounding interest working for you. Basically, the sooner you start investing, the less money you need to invest to get to your desired monthly income amount in dividends. Let me say that again so it sinks in. The sooner you get started, the less amount of money you need to invest to get the desired amount of dividend income you want. So that's why when should you get started? Get started today, right now, as soon as possible. All right, let's wrap up example number 2, and then we're just going to look at the summary on example number 3, and then we're going to wrap this up. Okay, so at the end of year 2, you've made about $731 in dividends in this example, and roughly that's about $61 a month. Of course, I don't have it here, but you would also have made some money from your Roth IRA in dividends as well. I think in the first year I maxed out my Roth IRA, I made $120 in dividends, give or take. Now, looking at year 3, guys, in year 3, our account, because we've been contributing money now every month for a couple of years now, plus we're reinvesting in dividends. So at the beginning of year 3, our account has $26,763 in it for our brokerage account. Our Roth IRA, because we maxed it out, is starting off now with over $6,000 in it, or roughly $6,000, right? So now we continue to contribute money. Our dividend income keeps going up, as you can see here. Same concept. It just keeps compounding. Compounding interest is working for you. You have more money working for you. At the end of the year 3, in this example, $41,000 should be in your taxable brokerage account if this is the amounts you've been contributing. And you'll make about $1,300 in dividend income, which is roughly over $100 a month in dividends. And your Roth IRA now has $12,000 working for you, and you're going to be making money there. Now, if you remember, in year 2, that's when my wife opened a Roth IRA for her. So by I said year 3. I'm sorry. I meant in year 3, that's when we opened a Roth IRA for my wife. So by year 3, we're contributing about this much per month to our brokerage account, and then we're maxing out our Roth IRAs, contributing monthly. So that's what we do. If you like I said, these aren't exact numbers, but these are pretty close to what we did. Okay, this is how we've done this. How we've gone from basically zero in dividend income to several hundred per month in dividend income, and it should continue to go up from there. This is very easy to do. All you're doing is you're like a real estate investor. You're acquiring properties and collecting rental income, right? You're holding on to the property and collecting rent, but you're doing it with stocks. So you're buying stocks, you're holding the stocks, or ETFs, or bonds, or whatever you're invested in, and you're collecting the dividend income, okay? You're not trading, you're not buying and selling so much. You're buying and holding, and you're collecting income on those investments. All right, guys, and I don't want to make this video too long, so I'm going to wrap it up there. If you liked the video, let me know by dropping a like. It really helps out the channel, and I really appreciate your support on this series. And make sure to share this video with a friend, especially somebody who's new to investing, because I think they'll really find this helpful. They might find it inspiring, and it will help them get an idea of what it looks like, or like at least roughly what it looks like for my wife and I, of how we built a dividend income over time. It's just consistently contributing money month after month after month. Now, as we go down the line, we're going to look at videos on stock analysis. We're going to start to get into that very, very soon. And you're going to be able to start to learn truly how to invest, how to build a portfolio, manage your risk, and all these other things. Stuff the average person has no idea how to do, okay? And I'm not an expert. I am not an investing expert, but I've been doing this for years now, and I've learned a lot along the way, and I feel like I have plenty to share with you guys. So make sure you leave your questions, your comments below. I can't wait to read them, and I want to address them in the next video. I'm going to be compiling a huge list of questions for the next video, and I just can't wait. So look forward to reading what you guys have to say. Okay, everyone, I'll see you in the next video. I hope I've been able to explain this clearly. I hope this made sense, and to show you how easy it is to get this ball rolling. Just start from whatever amount of money you can invest, start there, and grow that amount over time, and keep doing it consistently. And you're gonna get a dividend income snowball working in your favor. You're gonna start building passive income, and you're gonna have options that other people don't have. And you're gonna have those options sooner in life rather than later because you've done this, because you're not chasing the most expensive homes. You're not all about driving the most expensive cars, but you're buying and acquiring assets that pay you money monthly, annually, and quarterly. And you can easily do that with dividends. Take care, everybody. I love you all. Thank you so much for your support, and I'll see you in the next one. Peace.